Ever feel like you're just drowning in financial headlines? Well, today we're going to cut right through all that noise. We're taking a quick tour of the global markets to connect the dots and see what's really going on beyond those daily numbers. So take a look at this. At first glance, it is just a sea of red. From the Dow here in the US to the DAX in Germany, pretty much every major market is down. Honestly, it's the kind of snapshot that can make your stomach drop a little if you're not careful.
And if you want to put a number on that feeling of anxiety, look no further than the VIX. People call it the market's fear index because it basically tracks expected bumps in the road. And today, it jumped over 11%. That is a huge move, and it tells us investors are definitely bracing for some turbulence.
So to make sense of all this, we're going to take a quick 5-stop tour through the global economy. We'll kick things off with the daily scorecard for stocks, then look at the companies making waves, check in on commodities and currencies, and then wrap it all up by putting it all into perspective.
All right, let's get right into it. First stop on our tour, the daily scorecard. We're going to start by getting a handle on the main U.S. stock indices. You know, those big numbers you hear about every single night on the news.
But what is an index anyway? Well, think of it like a baseball team's batting average. It tracks a whole basket of stocks at once, giving you a quick snapshot of how they did as a group. It doesn't tell you if one specific company hit a home run, but it tells you how the team as a whole played that day.
And this is where things get really, really interesting. This slide just perfectly captures that tension between the short-term noise and the long-term signal. See, on the left, you've got today's storm clouds. All three major indices are down. But then look at the right. That's the 3-year trend, a story of incredible growth. It's such a powerful reminder that perspective, well, it's everything.
Okay, so we know the team's batting average was down today, but which specific players were striking out? To really get what's driving these numbers, we gotta look behind the index at the individual companies, the real movers and shakers.
So let's take the NASDAQ, which is just packed with these huge tech giants. When heavyweights like NVIDIA, Tesla, and Microsoft all take a hit on the same day, their sheer size acts like an anchor. They literally have enough weight to pull the entire index down with them. And that's a big reason we saw the NASDAQ fall over 2%.
But, stocks are just one part of this whole story. To get the full economic picture, we need to look at the physical stuff that actually powers our world. And that brings us to stop number 3, commodities, everything from oil to gold. Now, with stocks taking such a clear hit, you might be thinking, was it just a bad day for everything across the board, right? Was every single asset feeling the pressure? Well, not quite.
And here's where the plot really thickens. The commodities market was a tale of two totally different stories today. I mean, look at silver, down over 5.5%. But then you see crude oil, which actually rose. This split is super important. It tells us that while fears of a slowdown might be hurting industrial metals, worries about energy supply are actually pushing oil prices up.
Okay, our 4th stop takes us into the world of currencies. This is where we can see the constant, real-time flow of global capital. This is the foreign exchange market, or Forex for short. These rates are always shifting, and their little movements have a huge impact on the global economy. I mean, they influence everything from the price of your next vacation to the cost of goods that are imported from other countries. And just like we saw with commodities, the currency markets did not move in lockstep. You can see the US dollar gained a little bit of ground against the yen, but at the same time, the euro and the pound both dipped a little against the dollar. Now, these aren't massive swings, but each one reflects a really subtle shift in the global economic balance of power. All right, we've looked at stocks, commodities, and currencies. For our final stop, let's pull the camera all the way back and put everything into perspective. So, to quickly recap our little journey, we saw that major stock indices definitely took a dip today. But under the surface, the story was a lot more complex. Commodities were a total mixed bag, and currencies saw some minor but pretty telling adjustments. And this brings us to what might be the most important takeaway of all. Just look at the S&P 500 here. Through the microscope of a single day, you see a loss. But when you look through the telescope of 3 years, you see a gain of over 60%. It's the exact same market, just a different point of view. The story you believe really depends entirely on the lens you choose to look through. Which leaves us with one last question for you to think about. When it comes to the markets, is it more important to focus on today's weather, all the daily storms and sunshine, or should we be focused on the long-term climate? What story are you paying attention to?